to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Mr. Thompson Nanam, a Managing Director and Global CEO at 3i-Infotech, joining in. Welcome to the show, Mr. Thompson, and a pleasure to speak to you as well as get insights from you. Mr. Thompson, my first question coming to you is overall, if you see in terms of FY22, last 12 to 24 months have been a turmoil across sectors. Yes, for the few of the sectors, it has been a blessing in disguise as well. How would you describe the year for 3i-Infotech?
See, the year gone by for us, the way I keep talking about the new 3i, because if you recollect, we sold our product division at the start of the last financial year. And the positive is that it helped us to clean up our balance sheet and the P&Ls in terms of, we became debt-free. And we started this business with the new services business as a new 3i. So it's been a year of, working in parallel in terms of consolidating our organization, setting the foundations for the growth, setting the new strategy for the company, aligning everybody together. In parallel also, we started off a lot of initiatives in terms of, building new service lines in our group, setting up a build, which is because to build new products and platforms for creating IP, because we have sold off all our products. So that it's been a very busy year, the way I look at it. One is trying to conclude our deal with Attrition, setting our goals for the future, and also building capabilities and competencies. And, in parallel, we ended the year very well. The way we look at it, we also did a full cleanup of our books. We took all one-time cleanup. So right now, if you look at it as we see, it's a good start. And we ended with almost 676 crores, and Q4 was profitable for us as an operating business, because in Q2, Q3, we had taken a lot of proactive hits in terms of cleaning up our slow-moving debts, a lot of legacy charges which we need to clean up. So that way, I think it was a good, fulfilling year for us.
Right. So overall, if you see in terms of FY23 as well, what's the roadmap looking like, and what is it that we're going to achieve?
See, one very clear, in fact, I did talk about it in our investor call also, post our Q4 results. I think first time, 3i-Infotech is giving a very clear revenue outlook. So in fact, on a note, what we committed to our shareholders and investors, more like a blood commit, saying that we will hit these numbers as part of the turnaround. Is we are talking about 760 crores with 15 crores PBT as a must-do number, as an outlook we have given. And definitely we are looking at upwards of that. As a stretch target, we want to look at almost, 30 crores EBITDA, if you look at it. And the focus will be to, focus on upwards of 760 would be on revenue mix change. Because a lot of investments we have done on the new lines of businesses, whether it is 5G, IoT, blockchain, cybersecurity, all that we need to start now, monetizing and start generating revenue. So the focus will be on revenue mix change. 760 crores, 15 crores will be more of 80% of our traditional lines of businesses, and 20% will be some of the new lines. But beyond that, the goals we have set for our teams, the stretch goals, is to look at the revenue mix change. Because for revenue mix change, for a lower top line, we will get higher bottom lines. So that's the focus. The stress on top line will be less, and focus will be on better margins.
Right. And overall, if you see in terms of the organic revenue growth as well, $1 billion by 2023 is what we are seeing in terms of the milestone. What is the strategy looking like?
It's a very favorite question. Every analyst asks me that, because they normally look at this question from a traditional services company. And if you look at from a year-on-year growth perspective, it looks a very big task from where we are today. But I'll try and answer that to you also, and more in context of what we want to do in this financial year, which will give a bit of confidence for you also how will you get there. So fundamentally, we want to look at reaching these targets by 3 tracks, the way I look at it. One track is your traditional services business, which is running. The second track will be more cloud first, digital first, product platform-led services, which is focused on the small and medium business, which is not just the enterprise, but more on the small and medium business, which will be a growth driver. Globally, if you look at it, the trend in every country today, everybody is trying to figure out how to strengthen their SMB sector, because only they can generate jobs for each of the countries, whether you take India or Malaysia, any country you look at it across the world. All of us are looking at that. So that will be a focus area, which is a new line of growth, which is our Nure branded line of services. See, Nure is our cloud services we are building. So anything to do with Nure, for example, we have got Nure Edge, Nure Desk. It's a whole new line of platform products we're building around our cloud. All this will be OpEx, SaaS-led offerings for an SMB, like more like pre-configured for our manufacturing industry. Went to the next level of detail. For example, we are launching in US pre-configured for manufacturing for food industry in US. So it's as specific as that actually. So that will be one of our big growth drivers. The third huge growth driver, pilots are running for us, where we are working with telcos. Not just selling to telcos, but selling through telcos and selling with telcos, Hiral, because this is what we are counting on, a huge top line as well as margin enhancement for us, because a $1 billion target can't be reached by a traditional B2B model, you know where I'm coming from. So what we are doing is, just to expand on that, when I work with telcos, the pilots are running already. As I'm talking to you, we are running pilots with 3 telcos. Okay, if they are successful, we are talking about B2B2B. That is, one track is customers of telcos, their enterprise and SMB customers who will consume our Nure Edge, Nure Desk kind of products, whether security products. So this will be huge volume. Say, for example, I'll give you a small example. The pilot where we're running in Africa, in one of the telcos, they have got almost close to 3,000 SMB enterprise customers. Okay. Now the 3,000 customers have a need for almost 100 licenses from us. As an example, I'm saying. So we're talking about 300,000 per telco. That's the size and scale we are talking about actually. Okay, for a one line of business. So B2B2B will be a huge push from us. You will start seeing a lot of results coming this year, where these pilots will become revenue generating projects. So that will give confidence in terms of how we will hit these numbers as a third track. Ultimate track will be B2B2C through the telcos itself. That is going to telcos through the end consumer itself. For people like you and me. Now, you want to buy a SaaS product for your home and secure your entire home across all devices, because you might be prone to threats actually. So that will be the final thing which we want to get into, Hiral.
Right. And with this strategy in mind, how are we viewing in terms of the client additions? How is that segment looking like? What is the top, how much the top 10 clients contribute to our revenues right now?
See, for example, for us, the good or bad news for us, Hiral, is that, since traditionally 3i used to be a product-led company, our services business was spread across actually. So we don't have a big threat like traditionally all services companies have. There's a huge, your top 5 companies, clients or 10 clients contribute to 80%. So it's not like that. It's like, it's kind of uniformly spread out. So to your point, we have almost close to say 25 customers, who would be $1 billion plus a customers, as an example. So who's our focus area right now? No, we want to try and see how we want to expand those customers, right? So that's a great opportunity for us to double or triple those revenues in these 25, 30 accounts across the world, as an example. And now within that, if you look at it, the top 10 could be, where we have $3 or $4 million, right now. So if you see the split is like that. So it's kind of an even spread for us. So that helps us to, in fact, my visit, I told you, I just back from a long post-COVID, we're not visited our customers. It was very refreshing meeting customers. I was spent almost 2 weeks in US and 1 week in UK, meeting all existing customers and new prospects. It was very good actually, because for me personally, it's very encouraging. And they are also very, very delighted to hear about the new 3i strategy. And they're considering us for various other lines of businesses, which traditionally they would have considered. So the upside from our existing accounts is we are very bullish because our strategy is that for this year itself, we are betting heavily on expanding our existing accounts and the share of wallet in these accounts.
Right. And overall, in terms of geographies as well, maximum contribution comes from the US. So are we seeing expansion in any other geographies?
Yeah, so see, one is, as I said, US, we want to consolidate and expand. As I said, right now, we spend a lot of time in that right now, and we want to do it. UK is something we used to have huge business. You know, we were in UK for almost 20 years, 20 years. We have lost a lot of business there as a company. So it is very refreshing after my visit also. Now we are looking at expanding in UK. So fundamentally, our focus will be on US and UK this year. Okay. We didn't want to spread ourselves thin. We will expand our offices. We have offices in Canada. So our operations in Canada will increase. Both Canada as a geography, sales geography, as well as also delivery geography for US. Because there are a lot of opportunities to do nearshore from Canada as well. Okay. And there's more and more requirement for onshore, nearshore, service delivery models, which customers prefer. Then offshore, they want to restrict it to more higher end knowledge work rather than for everything, so that's where they are looking at it. And the third geography where we are coming back to life is Africa. So as I'm speaking to you, we are hopeful of, some new businesses coming from Africa. It's been used to be a good geography for us, but I think we have lost a lot of ground there. So Africa is coming back to life. And the Middle East, we are strong anyway. We are continuing with that. We are investing heavily in Middle East areas, expanding to Oman and Qatar as well. We are strong in UAE and Saudi. We are expanding to Qatar, Oman this year in that geography. As we speak, there are a lot of projects we are hoping to win in those territories. India is anyway our stronghold here. And in ASEAN, we are in Thailand, Singapore, and Malaysia. So we just want to stay focused with this year. We might expand into pilot projects or we are trying in Australia and Japan as new geographies. Otherwise, we don't want to expand into new geographies this year. This year will be more consolidate and our position in the existing geographies and make it stronger. And maybe start a few pilots in some of the new geographies. That's it.
Right. So overall, would it be right to say that the focus is going to see a revenue mix change from here on, which is margin accretive? So we're not really going to focus much on top line, but how do we improve our margins? Secondly, in terms of the strategy as well, we are looking at the non-service business as well, especially the efforts that we're making from the telecom sector side. And that continues to be our focus area from here on.
That's right. And also see, apart from the traditional services business, we want to bring this CloudFirst, new CloudFirst focused business process as a service, or it could be just platform or software as a service for SMB. So that will be a huge focus. We are launching that. Our first launch is in Malaysia. We are tied up with Malaysian government and us and Oracle. We are launching the sovereign cloud in Malaysia, which will be focused on their SMB segments. Example.
Right. And very lastly, overall, if you see in terms of where the attrition and the utilization goes, what is that looking like?
See, today, if you look at it, attrition is a global problem right now. At least the last 4 weeks, it's becoming better because now the good news for IT companies like us is that a lot of startups are laying off a lot of people. Okay, there's a huge layoff of startups laying off people across the world. And in fact, we are seeing our own workforce would have gone out for 3 times the salary or 2 times the salary or whatever it is, or all are ready to come back with the same salary they used to work for us. So that's the positive side we are all seeing as an industry, because they would rather work for traditional IT companies rather than do that. Second thing, as an organization also, as you just to refresh your memory, entire build organization is a consortium of startups only, what we are doing. So we are bringing resident entrepreneurs, we are bringing various type of leaders to build all these small divisions for us. So that has also been able to attract good talent who work for the startup culture also in a larger listed company umbrella. So it's a very unique initiative we are doing. So we're able to attract some talent there who traditionally may not be able to even join. We may not be able to attract them in the 3i-Infotech. Say for example, they are joining this because they feel this is a startup. within a large company, and they have the freedom to build what they have to do and the flexibility to kind of, innovate and, invent through our mantra, right? So that's attracting good resident entrepreneurs as leaders. And when they come, there are a lot of people who want to join them also. Right? So that is positive for us. But to your question, we are also right now launching alternate supply chains also. As I'm speaking to you, the media releases will come. We are opening a tier 3 center in South, which is focused on Oracle COE as an example. So it's like a model center. We are investing in it, training all these engineers, getting them ready. Overnight, they may not be ready actually for market ready, but try and see how we can make them market ready. And once that is successful, we want to replicate it across the country, west, north, and east. We are going to have these centers, and across world also. We have very similar centers in US, UK as well, which will also kind of overcome our supply chain issues.
Right. So with all of this said and done, the last question I have, Thompson, is that overall, with all the geopolitical tensions that we're seeing across, in terms of the US, the way the currency movement is happening, do you think there could be any negative or positive impact on the company?
A very good question, because it's a very good question. Because if you look at it, see, the last 3-4 weeks or whatever, the IT, stocks are all tumbling across the world. If you look at it, fundamentally, it's just a bloodbath which is happening. Big and small, large and medium, everybody is going through a tough time right now, right? From an overall sentiments perspective. But if you look at more fundamentals, from a fundamentals perspective, the way I foresee is this macroeconomic changes are going to impact drastically a lot of IT and technology services players, because I foresee a huge disruption because of recessions happening in large economies. If you look at US and UK, I personally feel they're already in recession, right? Maybe media might tell something else, but they're already in recession. Let's be very clear about it. The inflations are at 40-year, 50-year high in these countries. Okay, forget about our inflation in India. Their inflations are even worse today. If you look at it the way they have. See, all these are going to be immediate impact on a lot of companies, especially the tier 2 companies, which are sub-billion-dollar companies, will have huge issues there. The 500 to billion-dollar companies will have huge issues. And all of them will look at vendor consolidation, especially in the IT space, and optimized vendors. All the budgets are going to come down by 10-15%. Okay. So fundamentally, a lot of rationalization of partners and vendors are going to happen. And I see most of the tier 2 technology providers will be impacted big time. Okay. And the tier 1 also will get impacted because there's going to be margin pressure. But I foresee a silver lining for us as 3i. I'll tell you why. Because we might be at the bottom of the pack in the tier 2 itself, right? If you look at it, we coexist with a lot of tier 1 and tier 2 companies in large, some of the accounts where we have, and most of them are the sub-billion-dollar accounts. Okay. And, if you look at it, a typical spend of say 25 million, 30 million, a CTO's budget, which he has as an example in some of these accounts, a typical 5 million. And then we might be coexisting with a tier 1 player like TCS or Infosys, some other tier 2 players. We coexist. Our share of wallet might be less today. We might be having only 3 million out of 25 million. Whereas a tier 1 might have around 12-14 million budget, which he has today. But to the core question you asked, most of them are under tremendous pressure to reduce this 25 million to 22 million, as an example. Okay, or even 20 million spend, they have to reduce it. Now, who gets impacted is typically even the tier 1 is going to lose. The tier 2s are going to do that. But we see a positive upside for us, because with the new 3i, where we are getting into a cloud-first, digital-first, cognitive-led conversations, most of the customers are ready to place their bet on us. So for us, we see it very positively this year. And because you look at it, we have got nothing to lose. We are already the number 3 in a share of wallet there. So we will anyway get only the upsides. Whatever we get, 3 to 1 million to 2 million more to 5 million. So we see an upside in most of the existing accounts. And some of the large, tier 1 accounts are also ready to try challenges like us. They're ready. Okay, we got nothing to lose. Fine. You're talking about all these things. Okay, come over, demonstrate it to us. So a lot of them are ready to try and get to what I call the try and buy mode because they got nothing to lose. Suppose they find a good vendor like us, good partner, and we are able to demonstrate what we are talking, they are fine because they are desperate today to optimize cost.
Correct.
So in a nutshell, to summarize, I see it positive for 3i. We are positioned very well, and our positioning and our entire strategy has been well received. And I'm very confident now with the last 3 weeks, going to the road and talking to customers is most important, right? You can do all PowerPoints in a boardroom. It's very important to go to the field and validate with customers. I'm personally very, very, satisfied and glad that our strategy is well received, and there's huge promise in all the existing accounts where we are coexisting with large players.
Right. Absolutely. Seems like a good growth strategy from here on as well, and a complete reinvention that we're seeing with regards to 3i-Infotech. Thank you so much, Mr. Thompson, for joining us on the show. Always a pleasure to speak to you. Congratulations once again, and good luck for the coming quarters and years. Thank you. Speak to you soon again.
Thank you. Thank you, Ron. Thanks for this opportunity. Thank you. Take care.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.